Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Hiral Dadia. Man Infra, that's a company we're looking at in today's session. The stock is down around 5 to 6%, and this is on the way the earnings have panned out. However, if you see the performance on a YTD basis, you've seen returns of almost a little over 85 to 90% come in there. Let's welcome in our guest Manan Shah, MD at Man Infra, to understand what's worked, what's not worked, and what is the trajectory going ahead. Manan, good afternoon and welcome to the show.
Good afternoon.
Manan, clearly revenues have taken a dip this time around. Operationally, there has been a concern, though margins have improved and the profit has remained absolutely stable. What has worked and what has not worked?
So two major reasons. One, in the past 2 quarters, the projects whichever were already launched are near completion. So that's the reason you're seeing a lot of realization of the revenues coming in, and the profits being stable, and probably the margins also increasing a bit. Also, in terms of the drop, it's actually not a drop because I wouldn't advise to see the company's results in quarter-on-quarter basis, because these 2 quarters we've not had any launch of a new projects where you would see the recognition of the revenue coming in. And at the same time, the past launches which we had done, the revenue of few projects is not even started to be recognized yet. That's the reason you're seeing a small dip this quarter.
Okay. So, from a sales perspective, if you have to look at, the carpet or the per square feet, how much is it that you've sold this quarter?
So in terms of square feet, we've sold, I think, around more than 92,000 square feet, approximate area on the entire 6 months basis. And like I said, it's because of the new launches not being planned. But just recently, last month, at the end of the month, we had launched a new project called as Aradhya Avan, which is at Tardev. We are expecting a phenomenal response where we've already received very heavy interest for the same, for the bookings from the client side. And we are going to start to see the revenues coming in probably by the last quarter of this year.
Okay. If I have to look at the segmental performance as well, EPC projects, the profits have grown by around 96%. Real estate profits are down 72%. And other segments have seen a growth of 2.5 times. What is it that has led to the degrowth in terms of profitability, specifically with regards to real estate?
So in terms of real estate, what happens is the revenue recognition which happens, it usually happens after this summit of work being completed, and the construction and the sales been happening. The last 2 quarters has been the time where we've been bidding a lot of new projects. We've won a couple of projects where we've announced, and we've just received the approvals for the same. In terms of the portfolio pipeline, we've already got around 5.9 million square feet of upcoming, out of which we are anticipating a launch of more than 4 million square feet in the upcoming quarters, which is going to be spread across multiple projects across multiple locations. So there, I would see the company been growing very well in terms of the real estate side of it, and the recognition of these projects will start coming in sooner. In terms of the EPC side, we won a port project last to last year, and last year also we won another completion job for the port side, which is also added on to our order book nearly to around 650 crores plus. So we still have an order book of more than 1100 crores, which is yet to be executed. And at the same time, all the projects which we are doing for our own real estate venture, that recognition of revenue does not come onto these books. So a lot of times you'll see a dip in the top line, but because we do not have the revenue from our own projects coming in on the consolidated level basis. Plus, in the real estate side of it, if you see, there are a couple of projects which is on a revenue recognition model, which goes onto the books of our JV partner, which is like a landlord or the DM partner. So a lot of times the revenue does not come into our books. The straight profit comes onto our books. So that's why you will even see a lot of times the profits percentage increasing substantially well without having the top line coming in.
Okay. One clarification, Manan, as you mentioned right now, your own projects don't come into the books of Man Infra. What would that actually mean?
That's only the EPC side of it. So we've got two divisions where the EPC division working for our own real estate division. A lot of times, because the company is 100% subsidy of Man Infra, we do not charge an EPC income to our own subsidy.
Okay. And with regards to Royal Netra Construction, where you're doing a redevelopment project in Goregaon as well, what is that looking like? Because that is a bigger one that Man Infra is eyeing.
That's right. So that's going to be a long-term project where we've just entered into a 10-acre land parcel approximately. We're seeing that project getting to start executed in the month of, I think, around February and March first week, where the construction shall begin. And that's nearly 5 to 7 years project where we are seeing healthy numbers in terms of the top line and bottom line both as well.
Okay. And with your ongoing project pipeline, what's the kind of sales potential you see specifically in the next 2 to 3 years? So if you have to break it up between what comes in 24, 25, and 26.
It might not equally stagger out in these 3 years because a lot of projects, what usually happens for us is whenever we have a substantial launch, we tend to sell almost 30 to 50% of the inventory during this time of the initial launch only. And then the staggering years, the momentum is slightly more stabilized and flat. But as and when, if you see, like I said, around 4.5 million square feet of upcoming developments are there scheduled in the next 3 to 4 years' time, and which we would be executing in this timeline.
Okay. And you already mentioned about this redevelopment, which is a revenue potential of 4,000 odd crores. EPC ordered, you had a recent win of 680 odd crores for pavement work. What's the status of the same? Does that also come in FY24 itself?
We see partial of it coming in FY24 regarding the payment job that we won because we are on the verge to complete our first order, which we had won it 2 years back. So I think around 2.5 years would be the total timeline where we would be recognizing that 680 crore EPC order book of that particular project. Regarding real estate, yes, the timelines is staggered across 3 to 5 years. And there are around 4 to 5 new projects that we've identified, which we are on the verge to launch, out of which a couple of them would already be getting launched by the end of this financial year.
Okay. And if you see from the other project which you mentioned in Tardev with regards to real estate, where is it? How much of it is already sold out? And what's the kind of current rate that you are seeing in terms of these areas?
So Tardev is that redevelopment project, which is the DM model, like I said, where the revenue will not come into our books, that would go into the JV partners. We would be charging a PMC income on it, and we would be getting it straight into our bottom line. In terms of the construction stage, we are almost on the verge to complete the excavation by the end of this year. And we are just initiated the launch last month. We've seen very good response. It would be too premature right now to put in and comment on the number immediately because we've just started to receive the sales, but I can be very confident on the traction that's coming in and the movement that's coming in. We are currently on the price range anywhere between, depends on the inventory to inventory. We are quoting anywhere between 8 crores and beyond for our smaller apartments.
Right. Overall, if you have to look at FY24, previous year around somewhere in that range of 800 odd crores is what the revenue profile was in 23. This year, what's the trajectory looking like? Will it be a little over the 1,000 crore mark already?
We are almost on the verge, hopefully, to reach that benchmark. But I think so. It should not be very difficult to achieve the target. Of course, it's going to be significantly higher compared to the last year's revenue that we've done.
Okay. And what will be the key highlight or the next milestone that Man Infra is looking to achieve?
So the company has targeted a lot of new projects in the uber luxury segment. So we are on the verge to win a couple of ultra luxury projects in the city of Mumbai. And at multiple locations we've bid for. We are going to announce them soon as the moment the registration starts with the societies. And in terms of the pipeline, like I said, we've got around nearly 6 million square foot of a pipeline. which is already secured. And with these upcoming projects coming in, this pipeline will also be very, very healthy, where we would be seeing absolutely stable top line with an increasing bottom line, in fact, on year-on-year basis as well for the next upcoming 4 to 5 years' time.
Right. I think that's the pipeline one should be watching out for as well. Thank you, Manan, so much for joining us on the show and sharing the views. Clearly, if you see from a stock perspective as well, 87 to 88% is the kind of gains that we've seen in terms of Man Infra on a YTD basis. Today, there is pressure, but that's a 6% downtick coming in there on the back of the weakness that the numbers are showcasing, but on track to probably achieve that revenue number in the 800 to 1,000 crore mark. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.
I wish everyone at BQ Prime a very happy Diwali and very festive season ahead. And thank you very much for having me here. It has been a pleasure to be here with you.